Hi, welcome to this video day, which is on the 28th of August, it's Sunday. In today's video, we're going to be looking at three FX pairs that all include the Swiss franc. Now, the pairs we're going to be looking at are going to be AUDCHF, CADCHF, and EURCHF. We'll go to the charts in just a moment. Now, we believe the fundamentals are looking really bullish for the Swiss franc going forward due to the way the central bank in Switzerland views the Swiss franc, and also in terms of the potential for risk off, which will strengthen the Swissy as a safe haven. In terms of the technicals, they look really attractive as well. Now, in terms of Euro CHF, that's already in a nice downtrend, far more potential downside in our view. And next week, we're hoping that the AUD and CAD confirm downside break. So what we're going to do is we're going to go over and take a look at the trade setups first. But just before we do so, please do keep in mind it is my view as of right now. It can of course change in line with the market action and conditions. If you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video and you get live access to our member centre. Also follow us on Facebook if you wish and join our Facebook group of traders. So just before we go to the three trade setups, I just want to go very quickly through the attitude of the Swiss National Bank, the central bank, and the potential for safe haven flows. Then we're going to look at levels of entry, stop and target. Right, let's go to the trade setups. Just on the S&P 500, because it is correlated with the Swiss franc, it is a safe haven. The Swissy stocks, big rally to the upside, roll over, bang, big red on Friday. If we continue to the downside, that will help firm the Swiss franc. And we think stocks will continue the downside. You can check out my video on the USD for our full view. So we're looking for stocks to support the Swissy, but we're also interested in the Swiss National Bank. I'm just going to explain just quickly in a couple of minutes how they operate. It's very significant to our view of Swissy strength. Now, until June, the central bank were very dovish. They basically printed money like crazy, okay? Just like other central banks. The difference was they exported the money. You can see it here. They would sell Swiss francs and buy foreign currencies, bonds and equities abroad. Yeah, equities, speculative investments. Yeah, Swiss National Bank printing money, then buying equities. I find that extraordinary, but that's what they did, just acting like a hedge fund. And if they were a hedge fund, they'd be one of the biggest in the world. Now, in June, they raised interest rates, and after years of wanting to keep the Swiss franc down, they were indicating by doing that they don't mind Swiss franc strength. I'll explain why in a moment. Now what they have to do is get rid of the balance sheet. So what they're going to do is they're going to bring back their overseas holdings, change from a foreign currency back to Swiss franc. So buy the Swiss franc, that will keep it firm. They've got holdings all over the world. They've got a lot in the US. And in terms of companies like Amazon, Microsoft, Alphabet, they're in the top 10 in terms of their size of holdings. That money is coming home. Now, in terms of shrinking the balance sheet, Swiss National Bank, I'm just doing this quite quickly, is in a better position than most central banks since it can indirectly use the CHF as a tool to curb imported inflation. It comes from Steve Gallo over at BMO. We could see around the world how central banks are struggling with inflation. Switzerland won't struggle too much because they can just use the Swiss franc as a tool to curb inflation. Now that will backstop the Swiss franc from going down and help it firm over the longer term. Obviously, we're looking for safe haven flows as well. And on the other side of the Swiss franc, in terms of the three pairs that we're going to look at, the fundamentals are going to get worse for those currencies, the AUD, the CAD, and the euro. So, yeah, looking obviously for the Swiss franc To appreciate, let's take a look at the first pair, which is going to be CHF. No, sorry, CADCHF. Right, first pair, obviously CADCHF, and this pair hasn't really done much. You've seen the CAD come down a bit, a little bit of a rally, but we now are expecting safe haven flows to gain pace. Okay, now in terms of any currency pair, there's two sides to it. We view the CAD fundamentals as bearish, and I've discussed them in videos I've done on the USD. The market's view of interest rate hikes going forward is too high. They'll be disappointed. Bank of Canada won't tighten rates as much as expected. And the big one, the global economy is basically contracting, it's slowing up. We face possibly a global recession, which is bearish of all commodity currencies. Now, in terms of the technicals, they can be very, very simple. In terms of, let's just draw a line here, an upsloping trend line there. Now that basically comes to a round number. Round number is always important in Forex trading. That's where the order flow is normally around. So we can make that kind of a double trend line. What you want is a break of the round number. I'm going to say 73.80. Yeah, just to get clear of the round number, and then you can see if she runs. Where would you put your stop? You could put it back behind the next round number, okay, but I would use a closer trend line. I'll go there. Okay, so basically the double bodies and that tail that didn't follow through. Now that is not going to be much risk. It's just over 100 pips. Where are we looking for on the downside? Well, you've obviously got daily chart lows there. Okay, so that gives a risk to reward of, what is it, about 3 to 1. But you can see at the top, I'm not going to show the monthly chart here, and go and check it out for yourself. I think we could run all the way down to 68. So looking really, sorry, that line isn't straight. Looking really for Swiss National Bank backstopping, the Swiss franc. Basically, safe haven flows and bearish CAD fundamentals to send it far lower. So I think that's a really attractive risk to reward trade. Right, you can always sell it on a rally as well. Okay, if it rallied, you could sell weakness with a stop back behind 75. Okay, right, let's look at the next pair, which is AUDCHF. Right, in terms of this pair, on the AUD side of the pair, market view of interest rates, just like with the CAD, too hawkish. I don't think the RBA will deliver. Also, China and yuan weakness, big problems in China. The yuan sold off on Friday. If that sell-off continues, the AUD is heavily correlated with China and the yuan, obviously its biggest trading partner. That will weigh on the AUD. Now in this one, you've had very scrappy price action, a great fall there, which is well over 400 pips, a rally, and keep trying to get higher coming off really scrappy price action. The volatility dropped down. You can see that by the Bollinger Bands contracting. But on Friday, a nice thread. Now I think this one is pretty easy on the technicals. There is the resistance. Okay, so basically over here, big red after that blue steadied, poke there, poke there, poke there, down. Where would you sell? My own view is if it comes in at a new low, I would sell, or a move back to the first level resistance, which I'm going to use a round number as the resistance. Okay, just look for weakness off that level, stop behind second level, or if we open weak, just sell. Where could we go to? Well, I've got 59 as my long-term target. I should take this chart out a bit longer because there is support at 65. And I think we're going to go down there and then hopefully on to 59. So again, technicals can be very simple. Let's see what happens. Let's see what happens with this one. Now let's do our last pair, which is going to be EURCHF. Right, we're on EURCHF, and unlike the other two pairs, the euro is in a really nice downtrend After peaking out here, we break the 20-day moving average. And strong downtrends, you tend to find the 20-day moving average provides resistance. It does there. Nearly get to it, drop, poke at it. We're blue on the day, but we've come off the 20-day moving average. Now, in terms of the euro, I've done plenty of videos on the euro. I'm just out and out bearish of it. Bearish fundamentals. There's this view that interest rate hikes are coming. Market looking for 75 basis points in September. I do not think that will occur. Even if it does, it's in the prices, given the euro no real strength. The real problem for Eurozone is the energy crisis. It's out of control. Electricity prices are up. Was it 25% in France and Germany on Friday? There's going to be a long and deep recession. You've got a lot of problems in the zone. A lot of people think the zone can avoid a recession. I just do not think so. I think it's going to be a lot worse than people expect. I think it's going to be political problems in the zone, just out and out bearish. Now, while we've seen a big fall, how far could we go? I reckon we could go as low as 90. Okay. Now, in terms of playing this one, how would you do it? For me, it's pretty easy in terms of technicals. So we'll just go there with the support, which is the two bodies, not interested in the tails. That will be away from the round number. What about resistance? Sorry, I need to line myself up properly. There we go. That coincides with the 20-day moving average and the two bodies there. Okay. And then stop should be back behind the round number there. Okay. Can't get my line straight. So something like 97.20, 140 pips risk for the potential for plenty of downside. What about if the euro rallied? It might well do it. It's had quite a good run to the downside, so you've got the chance of a pop to the upside. If you got above 97, I would just sell back through this level here, away from the round number. Okay, stick my stop behind 98. So you could wait for the rally if you wanted, or just go with the downtrend. Sorry, I probably don't need to draw the line in to get the general idea. So yeah, there's three Swiss franc pairs to consider. We'll see how they go. I hope you enjoyed the video. Thanks for watching it.